We are ready to go. Good evening, everyone. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Taking you along for the ride for that safe, predictable, consistent 1% per week. Hey, Mark, how you doing there? Oh, missed you. There you go, Mark. Oop, hello. Hello. Mitch is here. Buzz, what's happening? Okay, so we are getting ready to get started. And we got, Vera Luia Pele. I had no idea how to pronounce that name, but how are you doing over there? Hi, hello. Hey, Ron RJ, Jim's here. That guy. Ooh, I hated that name. I did. Ex-girlfriend's kids always refer to me as that guy. Alvin, what's happening? Drake, good evening. Name, Andre. Okay, so let's get started. Today was an interesting day, wasn't it? Well, actually, yesterday and today was an interesting day. A lot of things went down today. A whole bunch. Messed up my week, tell you that much. I lost a bunch of money today. Well, because it's accumulation of the week. I tried doing a couple of credit spreads over the week, on the debit spreads over the week, and didn't go very well. Anyway, it happens. Play the game. Yeah, gotta pay the fiddler eventually. Alright, so what do we do here? Who am I? All that kind of nice, neat, fun stuff. Might as well get the disclaimers done and out of the way. I am James. I'm just a basic nobody. I'm not a certified planner. I'm not a stockbroker. I'm basically a nobody. I'm the guy down the street, around the corner, through the bushes, around the tree, whatever. Basically nobody. I have no degrees whatsoever. Didn't go to college. I just came across a strategy that actually works for me. It was created for my daughter, Albert. IWM. Not even a hi, hello, Albert. Just let's get down to it. Give me a minute too, Albert. Let me go through the disclaimers first before we take a look at IWM. Because if I don't do disclaimers, I might get in trouble, and I like floating under the radar. I like to be ignored. I don't want anyone to even notice me. That's the kind of person I am. I'm very low key. I don't not flashy. I just leave me alone. That's the generation I'm from. I pay my bills, take care of my responsibilities. Just leave me alone. That being said, okay, if I say anything that you want to take as advice, nope, it's not. I'm just going through the numbers. I just read what I'm seeing and give you my interpretation. That's all. This is meant for entertainment only, and because it is a Friday night, I got a big, what do you call it? Shoes to fill, because it's a Friday night. People working, they want to go out, they want to have fun. Why are they going to hang around and watch me all night long? That's just crazy. All right, but that being said, what I do here is I teach a very simple trading strategy I created for my 9-year-old daughter when she was 9. Okay? In 2008, my daughter, who's now 25, when she was 9, she wanted to do some trading because that's what I was doing. Because I was in an industry that just kind of fell in my lap, and I just went with it. And then I made so much money, I had to figure out what to do with it. Invest in the stock market, great, fun, dandy, all that kind of nice, fun stuff. But my daughter wanted to do the same thing. So here I am trying to figure out, to create a way for her to trade, make some good money, and not lose. So here's the challenge. For a 9-year-old, it had to be simple, safe, predictable, consistent, and number 5 is the big one. No way for her to lose. Now, the way to figure that out, and there's a reason why, because a 9-year-old daughter starts losing money, what's the first thing she's going to do? She's going to cry. I'm going to feel like crap. And then mama gets involved, and then I'm sleeping on the couch. And the couch really ain't that bad if you think about it. It's not. Okay, so you guys out there, you know what I'm talking about. Couch really ain't that bad. I think it's the humiliating part where you have to sleep on the couch. It's not that the couch is not comfortable. It's just that I did something wrong, and I got to... Anyway, needless to say, I don't ever see her going on the couch. Why is that? Why is it always the guy sleeping on the couch and the women get to bed? Anyway, let's not get into that. It is Friday, the 2nd of August, which means we are officially into the second... Well, we just ended the first week. So we're coming up to the second week of August. Hey, Akuna's here. So the first week of August done and over with, we officially into week number 5. Well, week number 5, it just ended for the third quarter. We're in the third quarter already. Where's this year going? My goodness. Jules, Thank you. Woo-hoo, woo-hoo, woo-hoo. All right, anyway. My 9-year-old daughter, she wanted to learn how to trade just like I was. So I had to come up with simple, safe, predictable, consistent, no way for her to lose. So there had to be five rules that went along with it. Rule number 1, never buy something you don't know, you don't understand, you can't give a 3-second elevator pitch about why you invested that money in the first place. Never buy something you do not want to hold long term. Simple. Go in as if you're going to buy it, hold it forever, that kind of scenario. Make sure it's a good deal. Never buy something you don't want to hold long term because you just might have to. Number 2, never sell at a loss. It kind of defeats the purpose of investing in the first place. Number 3, make sure the company has consistent increased dividends to the shareholders. Now, this is kind of like cheating. Do you remember Cliff Notes from high school? You didn't want to read the whole book, so you read Cliff Notes and do it in less time. But you do miss a lot. But anyway, Cliff Notes version on a company. My Cliff Notes version. If the company is consistently increasing the dividend to its shareholders for a good amount of time, well, that basically means they are consistently profitable. I don't have to read all the quarterly reports. I don't have to do any of that crap. Okay, if they're consistently profitable, a dividend is nothing more than the investors, that's you and me, the investors' share of the profits. So if the company's profitable, they're going to share the profits. Great. So you get a dividend. But if they increase the dividend every single year, year after year after year, for 20, that's 2 decades, 20 consecutive years, well, they got to be doing something right. That's where I want to put my money. You guys can put your money wherever you want. I want to put my money in a safe, predictable, consistent company that historical performance, that they've increased their dividends consistently every single year. Okay? The user 8589. Oops. That takes Intel out of the equation. Well, kinda yes, kinda no. Now, I do break the rules for a few companies. Now, I'll give you a couple of for instances. For instance, I trade Apple. Apple doesn't have 20 years of increased dividends, but Apple is on Warren Buffett's list. So I cut it some slack. There's a couple other companies that I cut some slack only because they are who they are. Well, there's 3M. Okay, they've been in business for over 100 years. Okay, they just recently cut their dividends. Okay, JD, Mara. There's a few others. We'll come to it as we progress. Sheila, how are you? What about Ford? Ford's on my list. They don't, now Ford is one I do cut a break to, along with General Motors, because they've both been in business for over 100 years. They're a big part of our economy. So yeah, I cut them some slack, and yes, they do increase their dividends. Not consistently, but they do increase them, okay? And they do employ a huge percentage of our population. So, you got to do due diligence for whatever you're going to invest your money in. So I cut a little break for a couple companies here and there. But rule number 1, never buy something you don't want to hold long term. Rule number 2, never sell at a loss. Rule number 3, plenty of increased dividends. I personally like 20 years of increased dividends. 4, make sure has weekly options. The reason why I want weekly options is the whole reasoning for this whole web show. I don't even know what to call this thing. What is it, a web show? Anyway, because I want weekly cash flow. I don't want to go back to work. Okay, I make as much for an hour a week as I used to working 40 hours a week. So I'm perfectly okay with that. But this is the big one. I spend 40, 50 years of my life working to get to this point. So if you're in your 20s, 30s, or even 40s and saying, damn, I wish I could do it, none, you'll get there. Okay, the stock market's been around for 400 years. We've had options since the 70s. So all the ingredients are there for you to be able to do it. Okay. Now I have a chunk of money because I've been working for a long time. Now I'm retired. So when you retire, you're going to have a certain chunk of money, and then you invest the way you see fit. How come you don't believe in long-term dividend investing? Well, Steve, I haven't met a single company that pays 50% dividends yet. I make 50% or more per year every year. Now, if I just bought the stock and collected the dividend, well, what am I getting? 3, 5%? Maybe? Okay, that doesn't work for me. I like 1% a week. There's not a single dividend stock company that pays 1% a week. If you knew it, let me know. I can quit this whole thing right now and just invest in that company. But it doesn't exist. There's no way, or there's nothing I've seen so far in investing in dividend stocks that will get you higher than 30 or 40%. I've never seen anything. Now, I've been investing for 20 years. Okay, don't get me wrong, I love dividend stocks. But if I buy a dividend stock just for the dividend, I'm getting 3 to 5% per year. Yeah, that doesn't work for me. Okay? I'll take a dividend stock, the kind that you're talking about, the one you want to buy and hold for a long time. I'll buy one of those. Okay? Get a 1% run up, which usually comes just before the dividend, using a covered call. Covered call is one of the safest trading strategies there is. So you're putting in the safety of a covered call along with the dividend coming together at a certain time when the stock moves up just before the dividend. Okay, that happens, everything comes together. It's kind of like the perfect storm. Think about it that way. Good evening. I sent you a request. Yeah, I see that. Hakuna, I got 220 people on the other line. So give me a little bit of chance to go through welcoming everyone first before we get to see what we're talking about today. So what else am I talking about? Uh-oh. That's what happens when you forget things. That's why I have a book. I write everything down. Then what's even worse, I forget where I forget what the book is, where I wrote everything down. Anyway, like, where's my book? Where's my book? It's funny. All right, anyway, interesting day today. I'll always love technology. Cool name. Marcrosis. Okay, what's happening? Okay, so here we go. Hakuna wants to check in over from Sweden. Hakuna! He's going to be on in a couple of seconds. Balance Iski. Okay, cool. It's Marco. Hey, how's it going there, Marco? Sorry, it just looks like all one word. Okay, when it looks like all one word. Anyway, how's it going, Marco? Glad that you're here. All right, Hakuna, what's up?
Thank you. Happy Friday, sir. Hope everything is good in the mansion.
Hey, I woke up above ground.
That's good.
Okay, what's on your mind tonight?
So I was thinking,
balance
now
is
maybe
key.
this is a little bit out of your strategy. Let's assume that you have a very bullish view on the stock market.
Okay.
Do you sometimes take the covered call a little bit further out of the money so you can make a return on the stock that you also will get rid of, plus that you collect the premium?
Okay, I'm not quite following.
Okay. Now, let's see if I can explain. Yeah. Instead of taking a position where you are in the money,
Yeah.
You take a position where you are out of the money.
Okay.
So that means that the price of the share has to increase more so you can get rid of the shares. But I was thinking, if you have a bullish view, then you will have the return up to the exercise price, plus that you collect the premium also.
Correct, and you also get the difference between the purchase price and the strike price. Yeah, it's a great plan,
Yeah.
but the only flaw that I see in it, okay, is that you're requiring the stock to move up. Now, let's
Yes.
okay, yeah, great. I mean, yeah, you're getting more money, but
But I was thinking, if you have a very positive market view, do you do that, or you don't do it at all?
No, I do that once in a while. It depends on where the strike price is as compared to the purchase price. But here's something for you to think about. Stocks move in 3 directions. Moves up, down, or sideways. And I hate saying sideways because it doesn't really go sideways. It goes up, it goes down, or it doesn't move at all. So that's three different directions, right? So the way you're thinking, the stock has to move up. That's only one direction on making money. Now, if you do if you do a strike in the money, if the stock goes up, I make my money. Stock stays the exact same, does absolutely nothing, I make my money. If the stock can even come down a little bit, I'm still making my money. See, I'm not looking for the stock to go up. That's stock appreciation. I'm looking for the consistency and the safety of the 1%. If I sat in front of my computer, I could make more than 1% every week. But I'm trying to balance my time in front of the computer with, time in my garden, watching the flowers, watching a chipmunk. I spent a day watching a chipmunk. It wasn't a day, it was about 3 or 4 hours. Literally, 3 or 4 hours watching a chipmunk climb up a tree, come down the tree with a nut. A couple of minutes later, he goes up the tree and comes back down the tree with another nut. And I watched this chipmunk for 3 hours, just thinking to myself, oh, this is great. I can't hear the buzzing of the refrigerator. I can't hear any machines in the house. There's no phone calls. There's no internet. There's no music. There's just the rustling of the leaves of the chipmunk going up. So when you get to a certain point, you're going to value money and time totally differently. Okay. So if I sat in front of the...
I understand. But I was thinking, and let's assume that you would do what I suggested and the stock doesn't move. But then you have collected the premium, but then you can just write the covered call next week.
Correct. But again, you're missing a missed opportunity, because when you carry a stock from 1 week into the next week, plenty of times, or many times, you're not getting that full 1% or 1.5% or 2%. See, the first day, the very first week, when you buy it and then you sell it, that's when you make the highest rate of return. That's why I want to get in and get out within 5 days. I want to be out in 5 days. I really don't want to.
It's difficult to get 1% the second week if you hold it.
No, not difficult. It's just certain stocks. Market makers are, they keep an eye on the flow. They keep an eye on the pricing. They keep an eye on the volume. Okay, and they know what's going on. They're offering a decent premium. People buying it, great, just before the dividend. Well, after that first couple of weeks, the premium's not as good. Because we're coming up right into the EX date. Okay, so I have no idea why they're pricing it the way they do, but usually after the EX date, the premiums go down. Sometimes, depends on the company. But I prefer to do the safety of 1% and then going in the money rather than out of the money. But you're right, out of the money you get a higher rate of return.
Because I was thinking it's good as long as the stock price doesn't fall. Because if it stays constant, then you can just do the same thing next week. And if it increases, then you make more money. That was my thought.
Really?
Okay, I understand.
Alrighty. Alright, Hakuna, always great to hear from you.
Okay, thank you for having me. I will let you get back to all the other folks. Okay, have a good evening.
You got it.
Bye.
Okay, so God QD. I'm kind of interesting what you said here. How about Stanley Morgan's mutual fund of 40,000 and pay you 3,000 every quarter? 3,000 every quarter. That would be 12,000 a year. So 12,000 a year. Whoops. Divide that by the 40,000 investment. That's 30%. Okay, what's the ticker symbol? I like to see the numbers. I like to see how consistent they are with the so-called payment of $3,000 a quarter. Okay, this cracks me up. Jayhawk. Join me, let's talk. Poor kid, I have no idea what you're talking about. Okay. Okay, QD need that one. Hold on, where were we? Hey, Doc's here. Let me get this thing under control. Alright. That was interesting. Glad you liked it. Okay, it's MSBSX. Really? MSBSX. I'm not coming up with anything. American Century Small Cap Growth. Mark Gallant. Alright, where did he just disappeared? Hollywood! I want to explain something to you if you don't mind. Bubba! What's happening? Yeah, explain something to me, Bubba. Morgan Stanley. Bubba sent you quest to be on live. Alright, Bubba, I don't know who you are, so before I do, I would need to have a conversation with you before I join your live. Morgan Stanley BS a joke. Okay. Made my 1% this week. Way to go, Hollywood. How do you calculate your 1% return? Okay. How do I calculate my 1% return? Alright, here we go. We calculate our 1% return. Now, who wanted to know this? User 568860 whatever. Okay, so how do you calculate a 1% return? And Bubba from Gambia, West Africa. Alright, Bubba from Gambia, West Africa. Welcome to the show. Unfortunately, I don't know you, so I don't invite people live unless I know who they are and I've actually talked to them, so I know what kind of contribution you can make to the conversation. Okay? Because I really don't want to hear about anything else other than investing in dividend stocks and how we can share information with each other to make it easier, simpler, safer, all that kind of nice, neat, fun stuff. Okay, so user 568868 wants to know how to calculate returns. All right, great. Well, first, we all know what this is. This is the chart. Over here, this is the option chain. Right up to the top is the stock information. The open, the high, the low, the close, the volume, all that kind of nice, neat, fun stuff. The bid, the ask. Great. So we're looking at Macy's right here. It's simple. It's easy. It's one I keep my eye on so I know what's going on with it. Macy's. Okay, we dropped down to almost 16 today. Wonderful. So if I'm going to buy it first thing Monday morning, I'm going to pay $16.09. The number's right there. Made the last trade of the day. The bid, the ask, the volume, the open, the high, the low, blah, blah, blah. All the numbers for the stock. This is two separate trades. Stock trade, option trade. All right. Now, I only deal with call options. I don't do put options because it's a conversation. Because remember what I said, it has to be simple, safe, predictable, consistent. Simple is simple, okay? So, number one, never buy a stock unless you're okay with owning it long term. I like Macy's. I get no problem holding on to Macy's, all right? So Macy's right now, $16.09. If I bought it at $16.09, I could sell somebody the rights to buy it from me anytime between when I sell it and the option expires. This is why I'm requiring weekly options on all the stocks that I trade. Okay? 2 August, that's today. They all expired today. 9 August, that's next Friday. 16 August, well, that's 2 Fridays away. 23 August, so on and so forth every week. I need your support, man. Please help me. And my okay, sorry, I don't do that. So, if this is what I can buy it for first thing Monday morning, $16.09, a covered call, which means I buy stocks and I sell options against them, which means I buy the stock. Oh, let me record this part. There's a paper like this part. All right. When calculating the returns, you got to figure out what you're buying it for. Whatever you're buying it for, great. How much is your profit? Well, a covered call, you get to know your profit ahead of time. All right, so I know before I even make the trade what profit I'm going to walk away with. Because when I say simple, safe, predictable and consistent, I need to know what I'm making, how often I'm making it, and how consistently can I make it. So a covered call. I buy it 1609. I sell somebody the rights to buy it from me at 16. Okay? And for that privilege of them buying it from me anytime between Monday and Friday's expiration date, okay, I'm going to collect 31 cents. 31 cents on a $16 stock is just a shy of 2%. That's shy of 2%, and you're asking about 1%. Okay, so there's a number, 1609. 16 is going for 31, so get my calculator out, clear that, and I go 31 cents, right? And I'm going to subtract 9 cents from it. Now, the reason why I'm subtracting 9 cents from it, because my purchase price is 1609, and I'm selling it for 16, so I'm losing 9 cents right at the top. Okay? So, right off the top of 31, we're going to subtract 9 cents, 0.09, and that gives me a grand total of 22 cents that I'm walking away with. Now, I know you think 22 cents is not a lot, but that's 22 cents per share. So if I got 100 shares, it's 22 bucks. 1,000 shares, that's 220 bucks. Million shares, well, you figured I'll go from there. But it's 22 cents per share. Now, if I'm paying $16 per share, I divide it by the 16. Now you're asking, why not 1609? Because that's the purchase price. You're correct, it is the purchase price, but I already subtracted the 9 cents away from the 31. That's why I get the 22. So no need to count that, no need to put the 9 cents in the equation twice. Okay, now it gives me a grand total of 1.375%. So it's a little over 1% for the week. The way you figure out your rate of return is your profits divided by your investment. Okay, so the profits, we already know, 31 cents per share. My investment, $16.09 per share. That's how you figure out your rate of return. Okay, and if the stock is above 16 come Friday, well, they will buy it from me, and I will just continue to, I'll be back into cash the following Monday, which is my ideal master plan. My ideal master plan. Jump in on Monday, be out on Friday, do the same thing over and over again. It's very, now, I don't see why you guys are all here. This is very boring. This is very repetitive. This is monotonous. I look at Macy's every single week. Okay? So, Monday morning, I'm going to be looking at Macy's. Now, I'm not going to buy Macy's Monday because I'm going to be watching to find the bottom. Okay, so right now, we are at currently a 30-day bottom with Macy's. Now, tomorrow, Monday, 1567. So Monday, we'll see what it opens up at. If it opens up higher, I like 2 days to the upside before I jump in. So, user 5688, hopefully that answered that question. Is AGNC good for your playbook? I love AGNC, William. Uh-oh, I missed those questions. Alright, uh-oh. William Lee, AGNC. I love AGNC. Let's take a look at it. So that's how I figure out the 1%, the rate of return. Your profit divided by your investment. Okay, AGNC. AGNC. Alrighty, $10.06 for AGNC. Yow. Hey, 30 days ago, check it out. 30 days ago was the bottom at 948. Check it out, wait up, 30 days ago. Then she shoots up 2 weeks later. What is that, 1055? 1057. Okay, 1057, she drops, pulls back, now we're right here. Now, unfortunately, this is one of those situations where it's a 50-50 toss-up. You got the bottom down here, you got the top up there, and we're smack dab in the middle. Which way is it going? I like AGNC, I do. Let's take a look at seasonality, because seasonality gives us an idea of how the stock moves on an annual basis. I do seasonality. Now, a seasonality chart, if you don't know what a seasonality chart is, all the way over here to the far left is January 1st. Over here to the far right is December 31st. That is a full year. Now the blue line represents this year. This is where we are right now, that little blue dot, right? The beginning of August. The red line represents 10 years worth of movement. So that's 2014, 15, 16, 17, 18, 19, so on and so forth, all 10 years, and that's the average movement. This is where we are right now, the beginning of August. So what does the stock normally do? Time will tell. Are you changing your strategy based on how the market's jumping? No, not at all. Don't change. My strategy's been the exact same for 15 years. That old saying, if it ain't broke, don't fix it. So we're here. I want to see the next 2 weeks. All right, this is what it's going to look like for the next 2 weeks based on historical performance. Last year, the year before, the year before, the year before. Okay, we're talking about AGNC. What does the company do? Well, it's the same thing year after year after year. Basically, going to go sideways for a couple of days, then she's going to go up a little bit. Okay, not that difficult. Hollywood, you're welcome there, sir. Gallant, I did good on Merck today. Okay, so we didn't finish up with AGNC. Oh yeah, we did. AGNC it's going to be a toss-up. It's no real direction because you bought them here 30 days ago. 2 weeks ago you're here. She drops, pulls back, drops again. Okay? It looks as if she's in a downward turn. Downward. But this could be a turning point. Could be. Don't know. Well, Monday will tell. All right, go on. Let's take a look at how well you did on MRK. Okay. 115. The 115 is going for 160, 168. Cool beans. No. Yeah, I do the 116 because at 154. If you do the 115s, you got to take out 54 cents off of this. Then you're almost in the same place as you are here. So I would go with the 116. So Hakuna, this comes to what you were talking about. Okay? At this moment in time, the 115, although it's a safer bet, okay, it's a safer bet. This one right here, the 116, is a better bet because you're already over the tipping point. You're 115.54. Not 115.45 or one below 150. All right. Anyway, let's take a look at the chart. First thing I always want to see with the chart: high, low. Where was it? Where is it? What direction is it going? This here looks intriguing. The past couple of weeks, I want to see what this big huge downfall is. So what we do from here? Well, a year ago, 105 bottomed out middle of October. Okay, 98.92. Topped out 134. Okay, from there, last 30 days. Okay, down, up, big down. A little bit of gap here. Drops. This is the bottom here. We got 1 day. I like 2 days to the top side. So Monday might be a perfect opportunity to jump in, depending on where she opens up on Monday. Now, anytime you make money in the stock market, you're going to make it when you buy low and sell high. Okay, great. That's all stocks do. They go up and they go down. So if you see it come down, okay, and you jump in 2 days to the upside, the reason why I say 2 days to the upside is because how do you figure out where a bottom is unless you have something to compare it to? Because right now, today, 115.20, yesterday was at 114, so today is higher than yesterday. But does that constitute a move to the upside? Or does that just constitute a little blip? You know, what's the most common fault your disciples make when they are creating a covered call the first time? Hitting the wrong button, buying an option rather than selling an option. Okay, that's the biggest challenge that most people come up with: pushing the wrong button at the wrong time. Okay, it sounds silly, but usually that's what it is. Oh, I hit the wrong button. I've done it many times. All right, so MRK, I'm glad you made money on that one today. See, well, we have 29 more questions. Hey, LA, what's happening? Oh, wow. New followers, cool beans. Holy cow, we got someone from Thailand. How are you today? Alright. Okay, sell 98, blah, 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 buy low. Yep, buy low, sell high. Quality stocks in business for 100 years. Dividend increases. Galans, cool beans. BTC, yeah. Sorry, I don't do Bitcoin at all. We're going into the largest recession of our time. I'm worried about the drop. All right, here's an interesting thing. Now, if you're worried about the drop, I can understand that. Okay? Let's look at facts, because facts don't lie. They don't. If you're worried about the economy going down and all that kind of crap, fine, dandy, then only put your money in something you know that is safe. It's going to keep its value, and when all the smoke clears, then you can just get back onto whatever path that you're going. Okay, so you got to find some type of place to put your money, because eventually, when the economies do collapse, the only thing that's going to be left is gold, silver, platinum, precious metals, commodities, stuff like that, stuff that can easily be traded for something else. All right. Now, when I say, and after that, what more faults are common except pushing the wrong button? Basically, that's it. Pushing the wrong button and getting emotional and getting greedy. Okay, I'm sorry, I'm answering these questions over here. So getting emotional, getting greedy can fog your decisions. Okay, so what were we talking about? Oh, we're talking about the recession. So if you take a look at the last 100 years, okay, okay, we've changed currencies plenty of times. Okay, we've changed currencies a few times in the last 100 years. The government, this is not the first time the government has done this to we the people. Okay, look at your history. You know, the stuff that they don't want taught in school anymore. That's the kind of stuff you want to do. So when you figure out that in the last 100 years we've seen World War I, World War II, Korea, Vietnam, the Great Depression, the stock market crash, the oil embargo, the dot-com bust, the 08, the financial crisis, the pandemic, all the crap economies thrown at us. Yet you have companies like, let me pull them up. All right. Oh, I don't like that. Trade type. Okay. I'm looking at the wrong damn list. That's why. I was wondering why it wasn't looking right. The wrong damn. All right. So the recession thing. Back to that. Let's say, hypothetically speaking, you're worried about what happened to the economy. So here we go. Johnson & Johnson, KeyBank, Chevron, Aflac, Target, Baxter, Kraft Heinz, ExxonMobil, Clorox, Capital One Finance, ConocoPhillips, U.S. Steel, PPG, AT&T, Citigroup, Kinder Morgan, British Petroleum, and then Wells Fargo, and bunches of others, companies that have been in business for over 100 years. 100 years they've been in business. They've seen all the crap that the U.S. economy has thrown at them for the past 100 years, yet they're still in business, and yet they're still increasing their dividends. To me, that is where I want to put my money. Because regardless of what happens after all this shit show is done and over with, okay, the world order taking over, whatever's going to happen, all right, we still are going to need toothbrushes, toothpaste, toilet paper, paper towels, spark plugs, windshield wipers, gasoline, oil. We're still going to need all that stuff. And eventually, when everything smooths out, we'll go back to normal. Well, some kind of the new normal. Right? I got a good one. MTG. Penny stacks. Never heard of MTG. Or have I? MTG. MTG. Yeah, that's a big fat no, penny stacks. The reason why I'm saying no to that is because it's a monthly optionable stock. Monthly optionable stock means they only have options once a month. That's it. All right? There's a couple of things I don't like about it. Number one, I can only write a covered call 12 times a year. 12 times a year is not as good as 52. I would prefer 52 checks as opposed to 12 checks. Sorry, just the numbers are different. Okay. Also, when guessing where the stock is going to be, I have to figure out where it's going to be in 4 weeks, not 4 or 5 days. Okay, by taking a look at a chart, you have a good idea of where it's going. Well, this one right here, it looks like, oh, wait a minute, it's going up. Yeah, it looks like it's going up. It's easy to see. But for the next couple of days, but for the next 22 days, because it's 22, I think it's 22 days, on average. Okay, every month has about 22 trading days. So I don't like, because the numbers just don't work. Okay, I can get 50% a year on weeklies because I can do it every single week at 1% per week. But with monthlies, the numbers don't. Don't get me wrong, you can get between 12 and 24, 25% from monthlies only. But I still would prefer 52% or more. So, sorry, penny stacks, that's a no. Penny stacks, dividend, yep, whatever. Ron, does the cause a wash sale? Does the cause a wash? Okay, I have no idea what that means. Terribly sorry. Bama, Catalyst. No idea what you're talking about. If you bought it back. Okay? Still not following you. Thanks, God. Ron, you have to buy, sell weekly, blah, blah, blah. Okay. Damn. Sorry, dude. All right. I'm missing some questions. I lost 10% of my port today. Port. Are we talking about wine? Are we talking about... Never mind. Do you get your Verizon dividend? I honestly don't know. See, I really don't pay attention to things like that. It sounds weird, I know. So I buy stocks, I sell them. I buy them, I sell them. I buy them, I sell them. If the money shows up in my account, great, thank you. I'm not chasing the dividend. What I'm chasing, okay, hold on a second. Let's go back to the calendar. Now, there's 9,598 stocks that you can pick from on a daily basis in the stock market. 9,598. We check every week. I check every week, see how many stocks are available. Last week, there was 9,598. Okay, so out of all those stocks, you're going to split it in two categories. One, take their profits and they invest it back into the company for capital growth, capital appreciation. Yeah, I don't do that. If that's what you're looking for, you're in the wrong place. Second group. The second group are those companies that share their profits. Now, if I'm making a lot of money and you lend me money, well, yeah, I'm going to give you a taste. That's what the mafia says. Hey, I don't care what you do. We just want a taste. Anyway, so Company B, those are the companies that actually share their profits with their shareholders. That's you and me. Once we buy and sell the stocks, we become shareholders. So if the company is profitable, we get our share of that profit in the form of a dividend. These little green dots behind me are one of the lists that I trade. The green little dots show the names of companies. Aflac, Target, Walgreens, Clorox, Ford, Intel, Kimberly-Clark, Kroger, ExxonMobil. Okay, all of these are great companies that consistently increase before the dividends are paid out. So if I'm jumping in before the dividend date, like 2 weeks on a Monday, and I sell a covered call, I'm looking for the premium. I'm not really looking for the dividend. If I get the dividend, that means I didn't get that means it didn't hit my target. Okay? So if I'm looking at Aflac, which has a dividend on the 21st, I'm going to want to buy it on the 5th. Okay, if the chart tells me so. Because the chart, first thing I want to look at on the chart, the high, the low, where was it, where is it, what direction is it going? Great. Then I want to look at the 3-month chart. Then I want to look at the 30-day chart. because the 30-day chart gives me an idea. Well, let's actually take a look at a couple. We'll take a look at this one. Hold on, I gotta work on this video. Shooting videos from my other channel. For you guys that don't know, I do have another channel called The 10 Minute Trader. It's going to teach something a little bit different. And that's going to be dividend capturing, which is a little bit different than this one. But for those people who don't have a lot of money to invest and just getting started, want something simple and easy, yeah, that's a little bit easier. Okay, so first thing, anytime I look at a chart, first thing I always want to look at the high, the low, where was it, what is it, what direction is it going? That's the first thing I want to see, those 5 things. Okay, after I see that, after I rule out, well, if that's an all-time high, it's going to be a no, which this one would be a no because it's at the all-time high. Once I take a look at that, I want to find out where the bottom was, 1630. Where's the top? 2595. What's the last 90 days look like? Well, here's the last 90 days. Where are we? 8765. Right about there. Okay, so here's the last 90 days. Look at the movement. Up, down, 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 up, down. And here's where we are now. That's the last 90 days. You can see the patterns. It looks like every month. Or every other, well, it's like a predictable move. Okay, it's not really confusing. Next, I want to take a look at the last 30 days. Okay, this is what the 30 days are telling me. 30 days is, here's the 30-day bottom here, here's the 30-day top here. Now, you can only have one 30-day top and one 30-day bottom. Well, here's the top. Now she's coming down. Why? Well, 30 days ago, we bottomed out at 2120. Okay, topped out at 2593. It's almost 26. So from 2120 to 2596, almost $26. That's like a $5 move. Okay, $5 move doesn't sound like a lot, but until you put it into comparison. $5 move on a $20 stock is a 25% move in the share price. Well, being a trader, I'm going to tell you, if this thing goes 10% or higher, I really don't care. I want to take my profits. I'll take 5% profit. I'll take a 10% profit because it ain't a profit until you take it. But if you get your bottom here and your top there, yeah, people are going to say, hey, all right, hey, 20%, I'm out. I'm going to take my profits and come back another day. Because what's the stock going to do next? Well, from here, she's going to come back down again until people start saying, wait a minute, that's kind of cheap. Let me jump in and buy it. So what happens then? Then she goes back up. That's all stocks do. They go up, they go down, they go up, they go down. The idea is to find a good stock that you like. This one I'm going to say no because it doesn't fit my parameters. I don't do monthlies because they just don't pay. But that's me. But if you like it, more power to you. Alright. Lily is the best. Well, cool beans. Now, don't know about that. I lost 800,000 this week. So fun. Well, Timmy, that's awesome. The reason why I say that's awesome, because if you can lose 800,000 and still be sane and still be able to communicate with people on a rational basis, well, you got to have a whole shitload of money in order to be able to be comfortable with losing 800,000. More power to you. But what brings you here? That's an interesting question. Tech stocks down and dividend stocks up. Cool beans. A bunch of nonsense. Way to go, Jay. Be short puts on the Russell. Well, there you go. I meant I lost 800,000 this week. Yeah, I get it. We want to see your weekly gains. You want to see my weekly gains? Not gibberish. Oh, so gibberish. Alrighty. Okay, so where are we? Account statement. There we go. Blah. 16 trades. Here we go. But don't get out of this. Okay, profit and loss statement year to date. There you go. Year to date profit and loss. Okay? All winners except for Here we go. 1, 2, 3, 4, 5. But you can't count 1, 2, 3, 4 of them because I still own them. When I say never buy something you don't want to hold long term, well, these 4 right here, AEO, Win, Kohl's, and Bitto, I have no intention whatsoever of selling them at a loss. So I only have one loss. One loss so far this year, Albemarle. Okay? That's just one account. Profit and loss year to date. I think I lost more on this account than the other one. Well, look at that. Walgreens, 20 grand this year on this account. So, look, all profit, and the losses are down here. 1, 2, 3. Can't count that one because I still own it. Ford. Okay? Hope that satisfies you. Okay, so let's get back to where we were. Down at that one. Let's go back to this account. This account has all the good information in it. Alright, so KJ, you okay with the gibberish? 1% per week is well over 1%. Do you use Boomerang Terminal? Never heard of it. Penny stacks. Okay, I see. There you go. Timothy went blah 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 blah. CMG 60. Ooh, let's check out CMG because I actually do have some CMG. And I did let CMG go today at a loss. How's that? I did. I let go, but it's not really a loss because last week I got over 4%. Okay, got 4% last week and I got 2% this week, but the stock dropped and I let it go. All right. Does it matter for you if it breaks even if the buyer is on your call? Do you pay any attention to that? Oh, Hakuna, I'm not quite understanding if I'm getting that right. Getting the numbers wrong. Does it matter for you what the break even is? Well, yeah, of course, for the buyer of your call. No, I really don't care about who's buying the call. Okay, my major concern is the company consistently profitable? The only way to figure that out is do they increase their dividends consistently? Okay, great, maybe they do. So if they do, I want to take a look at it and I want to check to make sure the numbers are right. Now, I don't really care who's buying the option that I'm selling. They're buying it for whatever reason they're buying it for. If it's listed here for sale at this price, well, that's what the price is. That's like when you go into a store and they have a price, like gallon of milk, $3.25. Well, that's what the price is. You pay it, you don't pay it. It's totally up to you. Okay, but could you ask the owner if they wanted to take less, a little bit more? Yeah, you could, but it all depends on how you value your time. So yeah, I take my 1%. I'm happy with it. I move on. Okay. CMG. Let's take a gander at it. Well, actually, let's take a gander at it in the account that it's in. I think it's over in this account here. CMG, yep, there it is. CMG. Alright, so CMG, I jumped in CMG at 54, was it? Hold on a second. 53.43. Alright, a year ago, CMG's at 39. Drops down to the bottom, the middle of October. Alright? 35.16. Tops out at 69.12, and that was the 18th of June. From there, she keeps on dropping to the 30-day bottom right there on the 26th. Now that is where I got really disappointed because I jumped in over here, I believe. No, right over here. Yep. Because see, we have a 30. Right, well, I'm going to go this way. Do this. Okay. 30-day bottom, 1 day up, 2 days up. That was my invitation to jump in. Very next day, I jumped in, and what happens? The stock kept going down. Now I'm starting to lose money. I actually got in CMG 53.48, way up here, okay? 2 weeks ago. Okay, after 2 weeks ago, she drops back up again. So I sold the 51s because we were way down here. So I figured I sold the 51s right here. And she went past it. So today she closes at 52.57. I'm out at a little bit of a loss, but I'm not really out. Here's the thing. Let's go here. Let's go account statement, CMG. CMG right there. Okay. Profit and loss year to date, 315. So I held it for 2 weeks, made $315 for 2 weeks on that one position. Next. Sorry, I'm just creating new videos for my other website. Okay. So hopefully that satisfies your desire to stick your nose in my business where it really doesn't belong. You know, when I say it is what it is, you take my word for it, which I prefer you don't. I would prefer you actually do your own research. If I say CMG is a good company, great, fine. But I expect you to do your own research to find out if it's a good company for you. Now, I don't normally trade CMG, okay, because it doesn't pay dividends. I bought it because it was the green monster on my shoulder whispering in my ear, 4%, take it. Yeah, so last week I got 4% on it, so great. I took it 4%. This week I only got like 1 or 2%. But then the stock dropped. All right, just get it off my plate. I got my profit. I'm okay. I probably won't do CMG ever again because I normally don't. Okay, Kevin, is that okay with you? So, high of the year, she drops. Last 30 days. This is what the last 30 days look like, and you tell me what you think. The 30-day high was 30 days ago. 30-day bottom was last week. How can you tell? Well, here it is here. 1, 2, 3 days to the upside. Well, that's the 30-day bottom. The whole week has passed. Well, yeah, that's the bottom. Okay? So, what's going to happen now? Well, she's coming down a little bit. Yesterday and today, both down days. So, what's going to happen Monday? Don't know. She should be, hypothetically speaking, coming from the high, hitting here, and then going back to the upside. That's where it should be, logically, because that's what stocks do. They go up, they go down. But every once in a while, they'll change and they'll do something weird. All right. CLK. I can't read that name, but CLK. Clark. No options. That's going to be a no. Ooh, Marco wants to look at Dow. D-O-W. All right. Now, I'm not 100% sure if Dow was on my list, but for the way I find that out is going to Yahoo Finance and going into historical data. Okay, so the historical data for Dow Incorporated, I want to do as much as they have. Okay, so apparently Dow, D-O-W, has only been paying dividends since 2019. All right. So here's the problem I see with Dow. Okay, 2019, the dividend was 70 cents. 20, 70 cents. 21, 70 cents. 22, 70 cents. 23, 70 cents. 24, 70 cents. They're not increasing their dividends whatsoever. So how do we know whether or not they're profitable? So if you like Dow, hey, more power to you. To me, no thanks. There are too many other companies that do increase their dividends every single year. This not being one of them. So Dow's going for 52. Currently, the 52 call strike. Okay, 52. The 52 call strike is going for 64 cents. Well, that's over 1%. Okay, probably like 1.25. Bubba, how you doing? So that being said, do I like this company at this price? Okay, me personally, I don't, because they don't consistently increase their dividends. Okay, that's like, no. It's just a no. Sorry. They don't increase their dividends. That's no. Because there's over 300 companies that do consistently increase their dividends. And that tells me that they're consistently profitable. This company for the past 4 years hasn't increased their dividends at all. So how do I know if they're consistently increasing? If they're consistently profitable? How do I know they're not going to be negative? Well, now I have to waste my time going and do all the research on a company that's been paying. No, thanks. I don't want to deal with it. Okay? I'm a lazy trader. Really, I am. Okay, I like the Dividend Kings. 50 years of increased dividends. What does that mean? Well, usually, if you're doing something for 50 consecutive years, usually next year you're going to do the exact same thing. And then the year after that, and the year after that. So there's 54 companies that have been on the Dividend Kings list. That means 5 decades of increased dividends. Okay, great. So you take those 54 companies and you put them every quarter. All right, great. I will look at those Dividend Kings. All right, let's see what they look like. Dividend Kings. Oh, PPG, Target, Johnson & Johnson, AbbVie, Abbott Labs, Hormel, Clorox, Colgate, Lowe's. Come on. Kimberly-Clark, Pepsi, Coca-Cola, Altria. I was thinking that the buyer's break even might impact when you will lose your shares, at what price level he will exercise his right. Okay, interesting question, Hakuna. Usually, okay, because I used to buy options years ago. Okay, there's a different mentality for people who buy options and people who sell options. I sell options now because I want simple, safe, predictable, consistent income. I like safety. Okay, safety, predictability. That's what I like. I'm at that point in my life. Now, at what point in my life I was into the, hey, I want to double, triple my money as quick as possible. That's when I was an option buyer. Because an option buyer, if the stock moved up a little, the option moved up a bunch. And you can make a bunch of money doing options if you do them right. Great, fine. But that's not where I am. But the question you're asking, Hakuna, the break-even point for an option buyer. When an option buyer buys an option for $1 and it expires on a Friday, they're going to look at anywhere between 100% to 200 or 300% return on their money. That's the reason why they're doing it. Now, there are other people that will buy an option and they want to buy the stock at a discounted price because they think it's going to jump up. Great, I'll buy an option. I'll buy an option, and then I will have the opportunity to buy the stock between this date and this date before the option expires. So you have to think of who it is you're targeting. Because if you're asking the person who buys just the option for the sake of the option increasing in value, that's one way of thinking. Now, the person who buys the option with the anticipation of buying the stock at a discount, they have a different mindset. Okay, so I try not to think of that. I try to think of, what am I looking for? Safe, predictable, consistent 1%. That, I find a good company. As it's going to the upside, all right, I buy it at the money. I sell the call strike at the money, and I want to collect that 1% premium or more. Simple, predictable, consistent. Ivan, daily or weekly only with close bid ask price. Good quality companies with high volume only. Well, not really high volume only, but I'm more for the consistency of the increased dividends. Poet, no. And there's a fair question. Okay. Sheila, would IBM possibly be a good one to jump into next week? Dividend 67. Payouts next Friday. Well, Miss Sheila, let's take a gander at IBM. IBM is currently at 189.12. The 190s, which would be the closest, are going for 158 to 195. So that's a tight fit if you're thinking that you're 1% there. All right, that one's going to be tight. But let's take a look at the chart, because the chart's telling me no. Sorry. The high, the low, where was it? Where is it? What direction is it going? All right. So a year ago, IBM's at 142.90. The bottom of the year is towards the end of October at 135.46. Top of the year is 199.45, and that was the beginning of March. Okay, from there, she drops with a gap down. You know how I say gaps have a tendency to fill. There's the gap here, and it filled right over here. Gaps have a tendency to fill. All right. So the last 90 days, we got a top at 199, we got a bottom at 162, and look at the last almost month. A little over a month and a half. Nice run up to the top. 162 to 192. That's over $30. $30 on a $160 stock, that's a nice move. That's over 10%. Okay, so the last 30 days. Here we go, last 30 days. Basically looking at almost the same thing. 30-day bottom, runs up to 30-day top, and now we're coming down. 1, 2, 3, 4, 5 days, 6 days to the downside. So she's slowly coming down. Not fast, slowly coming down, because your 30-day top's right up there. So my humble opinion is that I would wait another couple of weeks to take a look at IBM. As a matter of fact, I'm going to put IBM 2 weeks out. This is my book. I write everything down in. Come on. Page doesn't want to turn. There we go. All right, 2 weeks out, IBM. All right. Next video. All right, so what questions do we got next? Uh-oh, I missed a bunch. Then TLT this last week. TLT. Wow. Those are some weird expiration dates. iShares 20 plus year treasury bond. That's not even close to what we're looking at. Not even close to what we're looking at. Alright, that right there. Alright, yeah, so TLT is going to be no. I don't do bonds. They don't pay dividends, I don't think. Alright, Sol, please look at PEGA. P-E-G-A. Do you see growth potential there? Well, don't take this wrong, Sol. I've never heard of PEGA before. P-E-G-A. Pegasus Systems. I'm going to say no right off the top of my head, and here's the reason why, Sol. It's a monthly optional stock. Not quite. Monthly optional stocks are not quite my cup of tea. The reason why I say that, look at the price. The price at the moment is at a high and it's bouncing off the high. It's coming down now. So there's been profit taking. Okay, fine. But here's the thing. At $67, right? That doesn't even have a 67. It's got a 65. And the 65 is selling for $295. So at $295, I got to subtract and add all interesting math. Okay, so if I'm buying at 68, sell the 70, I'm getting 75 cents. That's almost worthless. And then I have to figure out it's for 2 weeks, and if I miss my target, I got to carry it for another 4 weeks. Yeah, I just don't like monthlies. Okay, I say I don't. I have 300 companies that pay weekly. Why would I look at a monthly, which adds to my work list? I'm perfectly safe with 1% per week. Perfectly fine with 1% per week. If I have to do monthlies, I have to come up with a whole new equation. I can spend more time in front of the computer, and I really don't want to do that. So PEG is going to be a no. Bodie Glimt. Hey James, happy Friday. Well, alrighty then. Take a swim. Horace, do you have WhatsApp to speak with for the best learning? My English isn't so good. I would like to. Alright, Horace, I don't do WhatsApp, and I don't do Instagram. No, not Instagram. Telegram. I do have an Instagram, because my Instagram's way over here. So I got people over there. Do you take this break even level into account since you want to get rid of your shares? Because I assume this break even have an impact if you are going to lose your shares or not. Oh, Hakuna, you're making it more complicated than it needs to be. Good quality stock, sell somebody the rights, great, get my 1%, move on to the next one. Okay? Will, EXC. I've never heard of them either. EXC. That's going to be a no. Okay, monthly. Okay, monthly optional stocks. Okay, now there's absolutely nothing wrong with them. Okay, because you basically do the exact same math. What am I buying it for? What am I selling my rights away for? Where do I think it's going to go in the next few weeks? Great. You can get 1, 2, 3% per month if that's okay with you. Me? Because I don't want to have to worry. Where's it going to be in 4 weeks? Okay, if I'm wrong, then I carry it for another 4 weeks. And if it's not where I want it in the first 4 weeks, what makes me think it's going to be where I want it in the next 4 weeks? No, I like every 5 days or every 7 days. Jump in on Monday, get out on Friday. Jump in on Monday, get out Friday. All right, EXC's a no. Sorry, Will. What about Peyto? JL. Really? Peyto? Never heard of them either. So usually, when I say I've never heard of them, it's usually going to be a no. PEYTO. Can't find this symbol. What does that tell you? Can't find the symbol, that's going to be a no. Chris Kelly. What do you think about TLT? Didn't we just do TLT? iShares 9. That's a treasury bot. No. What's your opinion on PEY? PEY. That's an ETF, and it's a monthly, and that's a no. Bodo. What's your favorite 3 companies right now? Well, that would be Walgreens, Macy's, and Nordstrom's. Is your other channel active already? I can't do live trading. I can't do live on the app one yet until I get to 1,000. I believe it's 1,000 followers. Right now I got like 18. I mean, I just literally started this week. And, you know, my marketing skills are horrible. Horace, would you like to have a WhatsApp to speak up? No, sorry, Horace. If you want to, yeah, I'm assuming if you have a phone number, I can give you a call and we can chat that way. I'm old school. I actually like to talk to people. I'm weird that way. TikToky. James, after today, I'm changing my name to DCA. Alrighty. Alright, keep going. These questions. Pegasus is spy on citizens. Yeah, probably. Hawaiian Electric. No, we looked at Hawaiian Electric a couple of weeks ago. They've stopped paying their dividends because of the Hawaii fires. Makes sense. Thanks. Way to go, Saul. Kellen, way to go. PM. Post Meridian. Philip Morris, huh? Now, I'm not saying no to Philip Morris. I'm saying no. I'm saying not this week. Okay? 100 up to 117. That's a 17% increase in less than a month. Yeah, there's going to be profit taking coming real soon. If you really like Philip Morris, you know, great play would be buy some 108s or 110 puts. Look at that, 25 cents. And what's the valuation if the thing drops down? Because there's going to be profit taking. There is. Look where it is. That's going to be profit taking coming soon. WFC, Wells Fargo. Stanley, what is the main cause of the fail of Amazon? I'm scared to lose my stocks. All right, Stanley, I'm going to tell you something. You're not going to be happy about this. What the heck are you thinking putting your money into Amazon? Take a look at the numbers. They don't pay dividends. They're not profitable. If you're looking for capital appreciation, buy a stock and go through the roof, yeah, hey, fine. It might do it. It might not. There's risks and rewards with everything you do. Now, I like no risk. Okay? I like simple, safe, predictable. I like flat, nothingness. I'm collecting the premium. I don't care about capital appreciation. I want to collect this. Buy it for 120, sell the 120s, get my 1%, say thank you, and then move on. Okay? I get too many companies that continue on doing that. Sheila, you want to look at Wells Fargo. WFC, Wells Fargo. Now, I do have me some Wells Fargo. And I like that drop like that. But I like it because I'm going to keep my eye on it. Because we've been trading Wells Fargo for a while. Okay, look at where she was. Now this big drop right here. I want to take a close look at that. And then I want to take a look at Wells Fargo next week and the week after. Because eventually, that's going to stop and go back the other direction. Eventually. The company's over 100 years old. All right. 53.18, the 53 is going for 94, the 54s are going for 54, both over 1%, fine. The high of the year, 62.45, that was the 15th of May. The bottom was the beginning of October, 38. A year ago, it was at 45. All right. Last few weeks, last 30 days. All right. Last 30 days. Big drop. Okay, big gap down. Okay, now I remember I bought some here when this big drop down came. Okay, and she shot up. Great. Now she went sideways. Now we have two more big drop downs right here. Eventually, that's going to do the same thing as this. Be up and then go up higher. That's what stocks do. They go up, they go down. And when they go down big, eventually, they will turn around and go back up. So you're going to make your money when you buy low and sell high. So Wells Fargo should be on our list for next week. Oh, Whirlpool's on the list for next week. WFC, Wells Fargo. Wells Fargo's on the list for next week. Alrighty. Mary, now, is that a question mark or is that a stock? NOW. ServiceNow. Interesting. Yeah. Sorry, Mary, I'm going to say no to this one. And the only reason, well, two reasons why I'm saying no to this one. Reason number one, most important reason, it's too close to the high of the year. Okay? Too close to the high. Second reason, $790 a share. However much money you think I got, I don't. Okay? I like staying below $250. At some point, yeah, it might be nice to buy 1,000 shares at $790 a share. I'm not there yet. All right, Marcus, Payton Exploration. We already said no to Payton. Sorry. What's my opinion on Plug? Well, that's an interesting question. And we're going to get to that in 1 second. Okay. What's my opinion on Plug? Plug. Plug Power. $2.16. Now, correct me if I'm wrong here, but I can't really see a stock at $2.19 being able to increase their dividends for 20 consecutive years. So let's take a look at Yahoo Finance and see exactly what Plug does. Plug. Okay, so here's the minor problem I see with Plug. Okay, there are no dividends in this selected time period. So how do I know the company's not? How do I know if the company's profitable or not? Well, the only way I can figure out if it's profitable is by going over here, checking out the summary, checking out the news, checking out the charts, checking out the statistics, profile, financials, analysis, options, holder, sustainability, all this crap over here. Okay? All the information's there. All I have to do is sit down and read it. All I have to do is take time out of my day to find out information that I already know. Well, the information I already know is they don't pay dividends. They don't share their profits. So if they're taking all their profits and putting them back into the stock for capital appreciation, I want nothing to do with them because it's a waste of my time. It's not what I'm looking for. Okay? Your distractions are everything that takes your mind off of your goal. Maybe they have made splits previously and that's why the stock price is so low. Well, that could be it. but they still don't pay dividends. Okay, so this channel here is specifically, I concentrate on a very small niche, very small. Okay, dividend investing for weekly cash flow. That's a very small niche. And there's so many other ways of making money online in the stock market over your spare time. Me, I worked 40 years of my life. I'm working since 1973, I think it was. Okay, that's a long time to be working. I just retired in November. I take a nice little chunk of money and put it aside, and I make 1% of it on a week, every week for the past 15 years. Now you may think that's a lot of money. No, because I'm using that money to pay my bills. All right? So it allows me a nice, quiet, comfortable lifestyle. All right? So my trades have to be safe, predictable, consistent. All right? For me, they have to be that way. That's why I'm sticking to this one trading strategy and I'm not deviating. Because every time I seem to deviate, I seem to lose. So I'm just going to stick with this and not venture out of my financial comfort zone. All right, more questions. AJ, what's your opinion of RKT? Is that right, RKT? I never heard of them. Doritos. Plug opinion, service. Do you have an option strategy? Yeah, Kelly, it's called covered calls. That's my option strategy. Okay, I buy a stock, I sell a covered call against it. What was I just about to do? Hakuna. Okay, but I assume it has an impact if you're going to lose your shares or not. Not really. Is it correct that he will only exercise his right when the price level equals the price of the call plus the strike price? No, that's break even. Okay, you remember, whoever's buying an option and they have the intention of buying the stock. Okay, so this right here at $2.19. If you plan on buying it at $2 and you buy the $2 call, the $2 call is going to 28 cents a share. Okay, so his break even is $2.28. That's break even. Now, most people don't buy options to break even. They buy options to profit. So to profit, he's already in at 228. So usually they like to double their money. Usually, like when I was buying options, I didn't want to buy it for 10 or 15 or 20% return. No, I wanted 100 or 200% return, because you don't always win. And in the way the math works, yeah, you'll win 2 or 3, but you'll lose 1. Okay? The one that you lose wipes out 2 of the profits, and you make profit off of 1. And the next week you do the same thing, and you buy 5, and you make money on 3 of them, you lose money on 2. All right. Can you explain the term premium? Chris Kelly. Let's see. Okay, Chris, I'm not quite sure how old you are, but see if I can explain it in this manner. Now, remember when you're in high school, this is what I used to do in high school, okay? If we wanted to go someplace, let's say we wanted to go roller skating, we wanted to go to the movies, or we wanted to go somewhere. Say, hey, can I get a lift? Sure. Okay. Can I get a lift? Sure. Throw me some gas money. There's your premium right there. Hey, I'm going to buy this stock right here at $2.19. Well, hey, let me buy it from you at $2 by Friday. Okay, great. Where's your gas money? Oh, right there. 25 cents. A premium is nothing more than consideration, like option consideration. Like when you're buying a piece of real estate, you want to lock it in at a certain price by a certain time, because it has a starting date, it has an ending date, it has mutual consent or meeting of the minds, and it also has consideration. There's 4 things you need to have a contract to be valid: beginning date, ending date, consideration, and meeting of the minds. That means you both got to agree on one thing. So if I like this stock here, I want to buy it at $2 anytime between tomorrow or Monday morning and Friday afternoon. And for that privilege, the premium I'm going to pay is 28 cents per share. That's a premium. That gives you the right, not the obligation. Now, puts, you have obligations. I don't cover puts because it's a little complicated. Remember, this was created for a 9-year-old little girl. It had to be simple, safe, predictable, and consistent. Simple, safe, predictable, and consistent. So I don't deal with puts. The calls is the right, not the obligation. So if come on Tuesday or Wednesday the stock goes to $4 or $5, whoever bought the option has the right to buy it at $2 before Friday, which is August 24th, the expiration date. Now I like weeklies because it's easier to see what's going to happen in 4 or 5 days than it is 2 or 3 or 4 months. See, I can take a look at the stock and say, oh, look, it's going down. Well, it's at 216. How much further down can it go? Well, it can go all the way down into the pennies. It could. But is it going to? So I'm betting on a future move. KVUE was a dividend of Johnson. Yeah, division Johnson & Johnson. Yeah, well, they were division of. They weren't Johnson & Johnson. Big, huge difference. Does KVU actually have 20 years of increased dividends? No, it doesn't. Johnson & Johnson has over 100 years of historical performance. I would put my money into Johnson & Johnson a hell of a lot sooner than I would put into KVUE, whatever it is. Okay? Don't get me wrong, they could take the exact same CEOs, go from Johnson & Johnson up to KVUE, whatever it is, and they could have them run it. And they might do a great job. Great, wonderful. After they get 10, 15, 20 years of increased dividends, yeah, maybe I'll take a look at them. Because I get 300 to take a look at now. Why would they want 301 or 302 when 301 and 302 don't have the same criteria? 20 years of increased dividends and weekly options. Sorry, I'm funny that way. Okay? Now, Plug has the weekly options, but it doesn't have any dividends. So that's a no. Why are we wasting our time with it? Or why am I wasting my time with it? So what do we have next? Hopefully that explains premium for you. Hector, CVS and Gold, private. I have a question, might be kind of dumb, but is the only buyer you can call? All right, I got it. Let's check that out again. Come on, I want to see that question. Is it only the buyer, or you can call? Come on, can't read. I don't read that fast. I want to see this question. Or another person, the same call option, also buy shares. Oh, you want to know if you can figure out who's buying? No, you don't. There's a market maker. Do we know who owns the store when we go into the store? No, we don't. We do know that they're selling us products. They're selling us milk. They're selling us eggs. They're selling us bread. They're selling us cereal. They're selling us stuff. You go to the corner store. You have products. You're selling them. Great. Well, who owns it? I don't know. Okay? If it's listed here, the bid and the ask, the market maker, whoever he or she is, it could be anonymous for all I know, but if they post a price for sale and a price to buy, price to sell, well, they're obligated, because to become a market maker, last time I checked, it was a $350,000 application fee. just with the consideration of being one. Yeah, but they make a shit ton of money. But you have to give up part of your life for it. I'm not willing to do that. At some point in time, you're going to get to a point where it's like, yeah, money doesn't matter. And I know I say that because when I was younger, I said, oh yeah, how it's always is. No, eventually, at some point in time, money loses its luster. It does. And your more valuable time is to spend with your kids, spend with your grandkids, spend with a loved one, watch the sunset, go play with a puppy. I don't know, go pet a bunny. I really don't know. Everyone's different. Me, I kind of like watching the grass grow. Someone said it's only the specific individual that bought your calls and that can buy your shares. Is that wrong? Well, kind of yes, kind of no. Okay? Let's think as of the market maker. Now, when you're seeing a bid and an ask, okay, what that means is if I own the shares and I want to sell it, well, that's what I can get for it. $2.18. If I didn't own it and I wanted to buy it, well, the ask is what I can pay for it, $2.19. Now, the market maker, think of him as the corner store owner. Okay, whoever owns the corner store has got to buy a gallon of milk at one price and sell it to you at another price. The spread, the difference between the bid and the ask, is the spread. That goes to the market maker. That goes to the store owner. So whoever buys these here they have to go through the store owner. Because the store owner wants his pieces of the pie. He's the one keeping the store open. He's the one creating the market for this particular stock. It is his job to buy and sell, to make sure the store is always open. 9 a.m. or 9:30 a.m. to 4 p.m. Monday through Friday, Eastern Standard Time. The store is open. Okay? It's like, I'm sure you've gone to a store before and says store hours 9 to 5. 5 p.m. we lock the doors. Too bad. Right? That's just the way it is. So we don't know who's buying and who's selling. We just don't know. And we don't need to know. All that we need to know, if the price is listed, that's what's for sale. BAX, does it look good for Monday? Baxter, ooh, I like Baxter. Baxter's been in business for over 100 years. Okay? BAX. Well, let's take a look at the numbers. First thing I always want to look at. High, low, or where is it? What direction is it going? Cool. Now let's look at these numbers. Okay, if I'm buying at 36.18, selling at 36, that's 60 cents. Take the 18 cents off of this, 42 cents. So I'm walking away with 42 cents. 42 cents on a $36 stock is still over 1.5% for the week. It's really quick. It's really not that difficult. If you have a difficult time doing that, just go up here. 36.18, 36.18. You take the decimal point and just move it over 2 places. So 0.36 is 1%. See, remember I said it had to be simple. Simple, safe, predictable. So explaining it to a 9-year-old, okay, honey, you see this price here? See the decimal point? Because at 9 years old, she already knew what decimal points were. You take it and you move it over to the left, that's 1%. Okay, so if 36 cents, if it's higher, well, that's more than 1%. It's actually that simple. Okay, oh, move the decimal point over 2 places, 36 cents, the 36 is going for 60 cents. Well, that's over more than 1%. Great. Now, chart. High, low, where was it, where is it, blah, blah, blah. Let's take a look. A year ago, the high, 44.85, bottomed out the middle of October. So anyone that has a similar call option can get your shares. Yeah, because you got to look at it this way. 6,025,000 shares of this particular company traded today. And I don't think they're all yours, because they're definitely not all mine. If I'm buying it, I'm buying 1,000 shares, maybe. Okay? Maybe that's about where I go. 1,000, 2,000, 3,000. That's where I'm at in my buying position at this moment in time. 1,000 shares. Okay, 1,000 shares on a $36 stock, that's $36,000. Okay, I could do that. But can I do 100,000? No, I can't. But apparently there's 6 million shares that traded today. Okay? So, that being said, the bottom, 1036, that was 31 bucks. Now we have a triple high here. Check that out, 44.02. 1, 2, 3, 4 times. In the last, this year so far. The last 90 days. Right about here. Yep, last 90 days. 90 days ago, the high, we opened up. Well, the high was 39.15. Dropped at 32.44 was the bottom. See, 90-day high, 90-day bottom. And look, a nice move to the upside. Okay, high, low, where was it, where is it? What direction is it going? That's 5 things. It should take you less than 3 seconds. High, low, where was it, where is it, what direction is it going? That should take about 3 seconds. Take one look at, okay, yeah. Picture's worth 1,000 picture's worth 1,000 words. Yeah, something like that. Okay, last 30 days. Because I want to be able to guess where it's going next. Okay? Now, next, from what the chart tells me, high, low, where was it, where is it, what direction is it going? Bottom's here 30 days ago. 30-day top was 2 weeks ago. And then she's just going sideways, and now she's going to probably come to the downside, because your 30-day bottom's here. Because if it was worth more than the 36.50, it would have hit it. But it didn't. Look, 1, 2, 3, 4, 5, 6, 6 attempts to go up over 36, and it doesn't do it. Okay, so more than likely people are going to start taking profits, and it's probably going to drop down. Probably. That doesn't mean it's going to. This is just guesswork by looking at, a seesaw. Seesaw goes up, it goes down, goes up, it goes down. That's all stocks do. They go up, they go down, they go up, they go down. Go. This right here. Seasonality. This is the last chart I like to look at. Far left, January 1st. Far right, December 31st. Okay? The red line represents 10 years worth of movement. Okay, that's 2014, 15, 16, 17, so on and so forth. The blue line represents this year. Okay, here's where we are right now, beginning of August. So what does the next couple of weeks look like? Right here, on average. Okay, that doesn't mean that's what it's going to do. It just gives me an idea based on, well, if everything's the same last year as it is this year, the weather is what it is, the economy is what it is, everything seems to be almost the same as last year. So hypothetically speaking, the company should produce the exact same amount of units or whatever they've done in the past, 10, 15 years. Usually the same year after year after year. Nothing usually changes that much. But it looks like it's just going sideways. No big up movements, no big down movements. Fine. I like that. It works great for covered calls and spreads. All right, that being said, so you come to this point, you got a big question to ask yourself, and this is an important one. Okay, the numbers work, the chart's okay, but here's the big question. Do I want to, what the hell was that? Do I want to own Baxter for a long period of time? Because there's a possibility I might buy it, it may drop, and I may have to hold on. Because remember rule number 2, never sell at a loss. It kind of defeats the purpose. Alright. That's Baxter. I like Baxter. But not this week. Sorry. Bottom, top, more than likely it's going to come down. You might want to take a look at Baxter in 2 weeks. As a matter of fact, this right now, Baxter's been in business for over 100 years. So yeah, I'm going to write that one down. Not next week, but the week after. BAX. Alright, so we'll look at Baxter again in 2 weeks. Alright, Chris already explained premium. Alright, Hector, you want to look at CVS and GILD? What time we get? Holy cow, it's 11:15. CVS. Alright, first thing, high, low, where is it? Blah, blah, blah. The number is 59.30. The 60's going for, really? 220. Cool beans. You see that number? Number right there? I can buy it for 59.30. The closest strike price is going to be the 59, which is 273. I like that number. Or the 60, and that's going for 224. Both of them well over 2%. Okay? Go pet a bunny. 86, that's disturbing. Question on Instagram. Yes, when the price is above break even, so it must impact if you are going to lose your stocks or not. Alright, here's the thing that I found with my trading with options. Okay, now, when you sell an option, okay, and a stock is in the money, which means it's higher than the stock price, the strike price. Well, more than likely, you're going to be called out. Now, the person who buys the option, if they are going to be buying the stock, it has to be at a price that makes sense. Okay, so if I'm looking at CVS at 59.30, right? 59.30, and I look at the 60s, and it's $2.28. Remember, this is the buying price right here. $2.28 if I'm an option buyer. All right. So now my break even is $62.28. So if on Friday the stock is at 61.01, yeah, they'll be called away from me by the market maker, because the market maker can make money on the next week because the stock value is higher than, anyway, besides the point. But the option buyer who buys the option in order to get a better price, Phil, on the stock probably won't buy it with the option, because they can buy it elsewhere for less money. Okay, so the break even for whoever buys this, all right, so if I'm doing the 60 and I pay 228, my cost basis is going to be 62.28. So come Friday, in order for me to buy that stock, it's got to be above 62.28. Okay, in order for it to make sense as an option buyer. Okay, so there's a big difference between option buyers and option sellers. Okay, I hope that worked. How much you make a year doing this? Now, I'm kind of unsure, Prince, what this you're talking about. Are you talking about standing here doing these live shows? Well, if you wanted to know, I make less than $2 doing a live show. Okay? And that's me standing here for 2.5 hours teaching you about what I do for my trading. Okay, so no, it's not a lot of money doing this live thing. My outcome here is to find people that are like-minded, that want to join me and a bunch of other people that think like me, that want to trade live together. We have a morning trading group. We get together every Monday, Tuesday, Wednesday, Thursday. And then on Friday we jump in at 3 just to balance out the account to see what happens on Friday. I'm looking for those people to join in. Eventually, I'm creating a trading company, a corporation, and I'm going to be offering my own shares for sale maybe 2 or 3 years down the line. This is just laying the foundation. So when I'm long gone and forgotten 20, 30, 40 years ago, my grandchildren say, hey, how did we start this company? What did Papa G do? This is documenting that. So this is not really for me or you. This is for my grandchildren. So for them to understand who their grandfather was. That's one of the reasons why I'm doing this. This is a long-term play for me. My grandson's only 4. I figure I'm living another 20, 30, 40 years. By that time, this is what Papa G did to start the family business. The family business is just something that's in my head in another 2 or 3 years. So when you see my stock symbol and you're trying to figure out how the hell can this company offer 20 to 25% yield per year, he'll say, hey, I remember when that guy was doing videos on YouTube, TikTok, and whatever. Okay, so this is just the beginning for me, so I'm not really going anywhere. All right? So how much do I make a year doing this? I don't make a lot doing this. This is just setting a foundation for my future corporation. So I'm what you call paying my dues. Okay? So when I started my first company, I actually lived in a van and I lived in the warehouse. So I rented a warehouse space and I put a little cot in the corner. So when I was awake, I was working. And I'd stay there and I would actually pass out and go to sleep there. And as soon as I'd wake up again and do the same thing over again. And the wife would come and deliver me food, and every couple of days I'd go home and shower because I had a goal in mind. Well, I have another goal in mind now, and this is laying the groundwork for that. Okay, I missed some questions. How do you determine where it's going? Well, how do you determine where it's going? Hakuna, so you will most likely lose your shares if the price is above the strike price. Correct. Okay, but whoever buys it after that, I really don't care. Whether it goes to the market maker or whether it goes to the person who bought the option, don't care. My main concern is, am I getting my 1% every week? Now, there's a question over here on YouTube. Question over here on YouTube. Pro bono, I have no idea what that means. Okay? Felix, no idea what that means. All right, so do it again. How do I determine which direction it's going? Well, that's kind of a silly question if you think about it. Now, we're all young at one point in time. We all know what a seesaw is. We all know the seesaw goes up, comes down, goes up, comes down, goes up, comes down, goes up, comes down, goes up, comes down. That's what a seesaw does. Goes up, come down, goes up, come down. Okay? How do I know when it's going up? Well, all right, See right here? She went up, she came down, she went up, she came down, right? So look at where the down one is, right there at the moment. Now I'm going to move 1 day forward. So that's a 30-day bottom at the moment. See it right there? That's a 30-day bottom. Oh, 1 day to the upside. Now, 1 day to the upside to some people might be an opportunity to jump in. Not me, I like 2 days to the upside. Next day. Okay, so you can count this two different directions. One, it's a little bit lower than the bottom, but then again, the high is a little bit higher. Okay, so is it 2 days up, or is it a new 30-day bottom? That's a tough decision. I'm going to count it as 2 days up, and then I would jump in. Next day, okay, it went up a little higher. Next day, a little higher, a little higher. How do you find out where the bottom is? The bottom basically shows up when it shows up, okay? Here, when I showed you this here, we didn't know if that was the bottom or if that was just a stopping point for it to continue to go down, or if it was going to turn around and go up. But when high, get profit taking, at some point, the investors, that's you and me, we're going to take a look at it and say, wait a minute, CVS at 56, hell yeah, I'm buying some of that. That's what we say. Hell yeah, I'm buying some of that. I like CVS. There's a CVS in every major city in the United States. Okay? They're pushing the last legal drugs, prescription drugs, pharmaceuticals. Where are you going to get them from? Walgreens, CVS, Walmart. That's the big three that I know of. All right. Let's move on to something new again. How low? All right, hold on. Since a bunch of stocks came down today, how much do you pick a stock for Monday? Well, that's simple. Hold on. That was the question I just got on YouTube. With everything that dropped this week, how do I decide what to pick on Monday? Now, it can be kind of silly, this answer. Okay. How do I pick where I'm going Monday? The calendar. It's actually that simple. Okay? Every Monday, I look at a new list. Okay, this Monday, Citigroup, Ford, Intel, British Petroleum, IBM, Siri, Visa, Wells Fargo. That's the only thing I want to look at. Honestly, don't. And I don't know how to say this any simpler. I honestly don't care about anything else. Monday, that's what I want to look at. Great. Friday comes. Thank you very much. I'll see you in 90 days. Because in 90 days, these companies are going to show up again in the fourth quarter. So this is the third quarter. Okay, this is going to look the exact same in the fourth quarter. Okay, and then next week, it'll be Apple, ConocoPhillips, PPG, US Steel, Clorox, Kroger, ExxonMobil, so on and so forth. Those are the only ones I'm going to want to look at next week. And then the week after, well, CVS, Aflac, Target, Walgreens. Those are the only ones I want to look at. Okay, so when you ask me, how do I know which stocks I want to look at? Well, it was created, you're missing the point. It was created for a 9-year-old. It has to be simple. Okay, honey, what's today's date? Oh, it's the 12th? Well, this is what we're looking at this week. That's it. And I don't know how to convey that to you any simpler. When I say it was created for a 9-year-old, simple, safe, predictable, consistent, and no way that the 9-year-old little daughter of mine could lose any money. Because if she did, I would feel like crap, like I failed as a dad. No, I don't want to have that. Simple, safe, predictable, consistent, and no way she could lose. Okay, 5 rules. Never buy something you don't want to hold long term. I got no problem whatsoever. Kroger, Clorox, ExxonMobil, Hershey's, Starbucks, Walmart, US Steel, Capital One Finance, ConocoPhillips, Apple. I have no problem whatsoever holding any of those. Okay, I like those companies. This is my personal list. Take a look at this. You ready? Okay. Now you probably can't see the numbers, but they're there. All right. Look at all these stocks for the 29th. Oh, look, it's only 5 for the 30th. You think that's only one? No, 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 no. It says 41. 41 companies on the 31st. Well, look at here. 61 companies on the 9th. It just couldn't fit them all in the square. 78 in this little can't fit them all there. Look at how much they can fit in there. 4, 11, 16, 21. They can fit 21 in this little group right here. But they can't fit 78 there, 54 there, 60, 64 there, 61 there. That's a lot. I have no idea about most of those companies. That's why I have my own particular list. Get out of there. And here's Warren Buffett's list. Alright, give it a second. Well, it's taking a while for it to fill. Oh, that might help. Alright, here's Warren Buffett's list. American Express, Bristol Myers Squibb, Globe Life, MasterCard, Verizon, AbbVie, Procter & Gamble, Bank Mellon, Ally, Aon, and DHI. I have no problem whatsoever buying any one of those. So first and foremost, for me to take a look at a company that has to have increased dividends, 20 years, that's what I like, and weekly options. That's the only two criteria. Okay? After I do those two criteria, then I'll look at the financials, and more specifically, I will look at the book value. Okay? So let's take NVIDIA. Sorry, I'm going to pick on NVIDIA for a second. NVIDIA has dividends. 1 cent per share. 1 cent per share. That's a hell no. Worse than that, the stock is at $120 per share. What's the book value? $2. Okay, I'm not putting my money into a company. I'm not buying a $2 piece of stock for 121 bucks. It doesn't make any sense to me. Now I'll go 3 to 4 times that amount. I'll go up to $8 to $10 on $2 stock. Okay? So if the company's only worth $2 liquidated, well, I'm not going to pay more than 10 to 15 bucks for it. Okay, so yeah, I do take a look at some of the fundamentals. So when I don't even bother taking a look at these. It's on Warren Buffett's list, fine, it's good enough for me. But my personal list, okay, these companies here, I will take a look at them. There's a few things I want to see. I don't want to read the whole, quarterly report or the annual report, because I already know that they increase their dividends consistently. If they increase their dividends consistently, well, they're continuously profitable. It's actually that simple. If they increase their payments to the shareholders that they owe money to, then they must be doing something right. It's weird that it's so simple. Okay, if you're profitable, you're paying more money to your investors. Okay, that's just the way it is. It's like the mafia says, "Hey, I don't care what you do, I just want a taste." Same thing, you know. Hello, James and everyone. How's your Friday? Wildcat Sam, how's it going? Ooh, Hakuna sent me a gift. Thank you for that, sir. Ooh, all these questions. Question on Instagram. Thanks. Is the market maker forced to buy your shares if the price is above the strike price? No, he's not forced to. But look at it this way. If let's go back and find sample. All right. If the stock is at 53.30, right, and I sell off the 60s, the cost basis for whoever buys that is going to be $2.28. So their cost basis is going to be $62.28. All right. If the stock closes at $60.50, well, the market maker can say, "Yep, I'll take that," and then it just goes into the 8 million whatever. Okay, because those 8,695,000 shares traded today. So if he can find someone that will buy your shares, if they're $60.50, yeah, it's over 60. You sold the option. So now that option's kind of hanging in limbo. It has no value to it, but the person who bought it, it's going to expire worthless because he's not going to exercise. He's not going to buy the stock at 62.28 when he can just turn around and buy it at 60. Okay, so yeah, even if it's $60.01, the market maker will pick it up more than likely. Not guaranteed, because I saw it every once in a while that it was in the money and I still ended up the stock the next week. It doesn't always, but for the most part, you can usually count on it that way. How do you set up a covered call, buy a call, and buy a put? Okay, your prints, I don't do anything at all with puts. Okay, but I'll show you. Crowd goes up. Yeah, CRWD. Yeah, I don't like it. It's CRWD doesn't have enough years under their belt. Okay, don't get me wrong. Google, PayPal, eBay. What's that other one? Amazon. They don't have 20 years of increased dividends. Okay, so those are no for me. Crowd. Yeah, no. Sorry. Okay, so your prints. I'm going to actually do a trade for you right now, and we're going to use we'll use CVS. Why not? All right, we'll use CVS just for the fun of it, and I'll show you how to do one. So we're going to do one right now. All right, turn on my video. All right, so we're going to do a sample of a covered call, and we're going to, for this example, we're going to use CVS. All right, CVS went down and the 30-day bottom on the 5th of July. From there, she shot up, pulled back a little bit, shot up again, pulled back. Now we're sitting at 59.32. Okay, let's say hypothetically, I think it's going to turn around and go back up again, just for the sample. All right, so I like it at $60. All right, so I'm going to do the $60 one. All right, right now it's at 59.30. I'm going to do the 60, so I'm going to collect 224. Well, let's see how it plays out. You ready? So first of all, let's get rid of this. I want to change this spread to covered stock. Now, remember I said I liked it at 60. Here's a $60 strike price, and I want to buy it at $60 strike price, so here it is. Now, what happens then? Two trades come up. Two. It's actually one trade, but we'll do it in two sections. Okay, first off, I'm going to buy 1,000 shares of CVS at the current price. I'm also going to sell 10 contracts. So, because for one contract, you have to have 100 shares. 10 contracts, 1,000 shares. 5 contracts, 500 shares. 9 August 24, that's this coming Friday. Because I want to jump in on Monday and be out on Friday. Great. Can you repeat again about the fundamentals? What you look for? Yeah, give me a minute or two. 9 August 24. That's this coming Friday. Okay, gotta get the price, limit order, blah, blah, blah. Now I'm going to hit confirm and send. Only once. You hit it twice, you're sending the order in. Okay, so what comes up next? The actual stock, the covered call stock order. Now listen closely, because I always tell people, anytime you're going to make a trade, read it out loud, because your eyes can deceive you. Okay, so as I'm reading it out loud, first thing I want to say, buy 10 covered CVS 100s. Those are the weeklies. They expire every week. You don't want to do a monthly because they have to hold it for 2, 3, 4 weeks. Yeah, no. 9 August 24. Well, it's going to expire next Friday. Okay, the $60 call, CVS, at the current market price, limit order, to open. Why does it say to open? Well, because it's two different orders. One is the stock order, where I'm buying 1,000 shares. I got to open that order. The second order to open is I'm selling the option for someone to buy it from me. Anytime between when I sell it and it expires. So if I do this first thing Monday morning, okay, first thing Monday morning until Friday afternoon, whoever bought that option has the right to buy it from me at any time at $60. Okay, that's what the strike price I sold. Now, very next line is my break-even point. My break-even is at 57.04. Well, right now the stock's at 59.30, so the stock can drop and I'll still be making money as long as it is above 57.04. Anything above 57.04 is going to be a profit. Okay, how much of a profit will depend on how high it goes. Okay, my maximum profit, 2,960. Okay, that's a nice little profit for one trade. But here's the thing, it's costing me 57,000. Well, because that's for 1,000 shares. Now the numbers are the same, okay, percentage-wise. So if I do 100 shares, so let's change this really quick. Let's do 100 shares. Okay, my break even is still the same. Now I'm making $296, and it's costing me $5,700. It's costing me less, but my rate of return is still the same. Okay, this is my profit, this is what it's costing me, so what is my rate of return? Okay, so I take my profit. Okay, my profit's 296. I divide it by my investment. My investment is 5704. 5704. So it comes a total of 5.1%. See that? 5.1%. Well, that's a nice percentage, isn't it? For the week. All right? So that's nice. And then I hit the send button, and then it goes to the market maker. Okay, it's actually that simple. Got it there, got it there. Change that to this. Go back here. Blah, blah, blah. All right. So hopefully that helps you out. How do you set up covered call? I just did that. Look at all these questions. Winner, you trade options. You Prince, yes I do. I appreciate the help. You're welcome. Adolfo, what's the cost usually for these calls? There is no usual. Sorry, there isn't. See, this call here, 71, 91, 117, 148, 184, 228, 620, 545. They're always different, and they usually go directly related to the stock price and the amount of time value that is left. Okay, they have what's called the Black-Scholes pricing method for stock options. It's a huge mathematical equation. All right, question. Have ET for its dividends. Energy Transfer. Now we take a look at Energy Transfer every once in a while. Okay, don't get me wrong, it comes up like once a week. Somebody likes it. Okay, at this moment in time, I can't see it. All right, take a look at the number. Take a look at the chart. Okay, all right, a month ago dropped up, down, up. Well, now it's coming down. It's actually that. It's a seesaw. Up, down, up, down, up, down. That's all they do. Okay, right now she's in a downward trend. So, do I like ET? It's okay. Let's take a look at how often they pay their dividends, and this is where I lose. This is where they lose me. Okay, they've only been paying dividends for the past few years. Double check that, see if that's right. Maximum amount. Okay, no, they go all the way back to 2006. So all the way back to 2006. So it's not quite 20 years, it's like 16 years. Oh no, 18 years. Okay, but here's where they loses me. Okay? 2010 it was 14 cents, 2011 14 cents, and then it was 16 cents for 2 years, 17 cents. What was the long one? Here we go, 29 for 2 years, 31 for 1, 2, 3 years, and then they cut their dividend in half. In 2020, they cut the dividend in half, and then went to 18, then they went to 20, 23, 27, 31. So now they are where they are. So they are profitable, and they're continuously profitable, but not 20 consecutive years. If you go back and you look the history of the dividend payments, okay, 1, 2, 3, 4, 5 payments at that price, the 31, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 3 years at 31. So 3 years they weren't profitable. Okay, so that's a question you need to ask yourself. Now, some people like ET, Energy Transfer. I'm not saying it's a bad company. I'm just saying that, I have enough that actually fit the parameters. Why would I want to put one in that doesn't fit the parameters? Yeah, they have dividends. Yeah, they consistently increase them, but they don't do it every single year. And that may be a deciding factor for some of you. Questions? Hi, David. I don't know who he's saying hi to. My name's not David. That's okay. Uh-oh. Patrick Doherty. Haven't seen you in a few months. Looks like you really improved your setup. Okay. Now, Patrick, that's no fault of mine. I've been here every single night. I've been here every single night, 9 to 11:30 Eastern Standard Time since January 2nd. I've only missed 2 days. I think that's pretty damn good. I'm shooting for the whole year. Can I do the whole year with only 2 days missing? Okay, now, I did get an award in an elementary school for perfect attendance. Okay, so I showed up every single day. All right, which tool do you use to make the trades you mentioned? This is Thinkorswim. That's the only tool I use. Thinkorswim, you can download that free on the internet. You go to thinkorswim.com. Okay, you can use the software of the trading platform for free. Okay, I encourage people to use Thinkorswim. That way, when we talk, we're on the same wavelength. I know where everything is in Thinkorswim. You take a look at E-Trade or Schwab or any of those other ones. Yeah, I'm clueless. But they're all basically the same, you know. But I like Thinkorswim. They are with Charles Schwab. Okay, they do encourage you to open up an account with them, you know. How effective is the dividend snowball? I've never even heard of the dividend snowball. I'm going to have to write that down and do some research on it. Because honestly, I have no clue what that is. Thinkorswim. Bro, I know what you are. Cool. I have no idea what he means by that, but alright. Oh, and that was the last question. Cool beans. We're at 11:12. Oh my goodness, I ran out of questions. What do we have over here on YouTube? Okay. Oh, well, he wants to know the fundamentals again. Hold that thought. Can you repeat again about the fundamentals? What you look for and how you look at it, and what's your criteria when it comes to book value? Oh, alrighty then. Basically, what I'm looking for consistency, predictability, and safety. That's me. I'm retired. I take my funds. I make a little bit off of them every week, and that allows me to pay my bills. Great, fine, works for me. What I'm looking for is companies that have consistently increased their dividends for 20 years or more. Those, basically, dividend kings, dividend aristocrats, dividend champions, dividend contenders, Warren Buffett's list. Those 5 lists you can look up on Google. You just Google Dividend Kings List 2024, so on and so forth. Can you repeat it again? Fundamentals. Oh, your residents, dude. Come on, let's go. Okay. 20 years of increased dividends. Simple. 20 years of increased dividends. Weekly options. Once you do those two criteria right there, you knock out 97% of all other companies in the stock market, because there's 9,598 companies currently that you can invest in. So if you look at companies that increase for 20 years or more, just their dividends, and weekly options, you're going to come to a list around around 300. What about the valuation, the book value? Yeah, we're going to get to that in a minute. Now, the stock price, okay, which, in my humble opinion, is nothing more than the public's perception of the value of the company. That's it. That's what me and you think it's worth. Okay, we think it's worth what someone else is willing to pay for it. That's basically it. Okay, if it was worth more than $16.50, it would have went higher than $16.50. But that's all it's worth. Can you mention to be careful of people pretending to be you? Yes, Laurie, I'll get to that in 1 second. I'm going to actually stop the questions and keep that right there. Give me 1 second. Let me finish going with fundamentals. All right, so number 1, 20 years or more of increased dividends. Number 2, at least, bare minimum, weekly options. Okay, I don't want to look at monthlies. If it doesn't have dividends, don't want to look at it. Doesn't have options, don't want to look at it. Okay, I have enough to look at it with what I have available. I have over 300 companies that do fit that criteria. And if that wasn't the criteria, maybe I'd drop it down to 15 years of increased dividends. I want consistency, predictability, and safety. I'm at that point in my life where I don't want to take the chance. If it's a good company, great. I want to take a look at it. I want to take a look at it when the time is right. When she's coming up from a 30-day high, okay, and she's starting to move back up, because you're going to make your money when you buy low and you sell high. Okay, you can't get any lower than the low of the year, the low of the 30-day period, the low of the 90-day period. She turns around, goes back up. No matter what stock you look at, let's pull this one back a little bit. Okay, look at this one, Energy Transfer. Down, up, down, up, down, up, down, up. You see it back there? Down, up, down, up, down, up. That's all they do. They go down, they go up. They go down, they go up. Okay, it's really not that difficult to see. You just take the slider, go across a little bit. Same thing. Look, up, down, up, down, up, down, up, down. That's all it does. So let's get back to the fundamentals. Fundamentals. After you've isolated the companies that have consistently increased for over 20 years and have weekly options, well, yeah, you can have a list a little over 300. Well, how do you get rid of the other ones? Well, the other ones you get rid of by figuring out what their value is. Okay, so book value. Let's take Ford for instance. Ford, currently the stock price is at $10. All right, $10. The Ford's been around for over 100 years. The book value, the stock price is $10.03. All right, so let's go here, Yahoo Finance, and we'll come to statistics. Slide on down. Book value per share. Oh, they've come down. $10.96. They were at 14 at the beginning of the year. Okay. Okay, so Ford, the stock price currently is at $10. Well, the book value is $10.40 something cents. Look at General Motors, GM. Okay, the book value, the stock price, 41. Book value for GM, 62.39. Okay, 62.39. The book value per share. Okay, but take a look at NVIDIA. NVDA. $107. The book value per share, $2 per share. Okay, ask yourself, if the company is valued at $2 per share, why would I pay $100 for it? Okay, I have to cut it off at some point because it gets ridiculous. In my opinion, that's ridiculous. Okay, also, NVIDIA, NVDA. Okay, let's take a look at Market Watch. NVDA. NVDA. Okay, not in July. June, there it is right there. Okay, NVIDIA. 1 penny. Okay, so there are some things that are just beyond silly. Why would you buy a company that pays 1 cent dividend? It's just my humble opinion. What the hell do I know? But that's what I look at. Alright, can you mention to be careful of people pretending to be you? Ooh, Laurie, that's a good one. Now, there's 100 people here. Just to let you know, if you really want to talk to me, you really want to get involved, DM me your phone number. I will personally give you a call. Now, I have talked to people, plenty of them. Alright, I have no qualms whatsoever calling somebody. Now, there's 27, as of last week, there's 27 imposters pretending to be me. I find it a little flattering. Yep, a little boost to my ego. But, you know, there are people out there like Calvin Hill. He's got hundreds of people pretending to be him. So I learned a few tricks from him, Calvin Hill. So if you look at my bio, look at how many people that I'm following. I think I'm only following 2. So if you see anyone else pretending to be me, they have more followers. Well, that's not me. Okay. Let me see. Can I even look at it? I'm following 6. Really? I'm gonna have to double check that. All right, so I'm actually following 6 people. So there's 27 people pretending to be me, and you will get emails, text messages, asking them, hey, this is James from Dividend Stock Talk. Have I got a great deal for you? Yep, nope, that ain't me. Okay? I don't do cryptocurrency. I don't do Telegram, and I don't do that other one. What's that other one? WhatsApp. Yeah, I don't do that. Okay, I don't do futures. I don't do cryptocurrency. I don't do forex. There's another one, binary. I don't do binary trading. This is the only thing I do. Dividend capturing for weekly cash flow. Now I do have another website here that is the 10-minute trader. So when you ever see one of my videos, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trader. Okay, the 10-minute trader. It's a brand new one. It only has like 8 visitors on so far. So I'm still working on the videos. I'm still working on the bugs. Okay, I'm not very good at this tech stuff, so I do try. You know, I am in 60s. I am retired, and I'm in no great hurry to do anything. So I'm sorry if it's a little slower for you guys. So yeah, be careful if you ever responding to an email, a text, a DM that they say they're me. There's a possibility there. If you really want to talk to me, send me a number. I'll call you. You can ask some of the people here in the audience. Does he call? Does he really call? Yes, he does. Ford will spy on customers, resell their data. 2, 3. Okay, yeah, everyone does that. Tech's falling out of favor right now. That probably is. Why? Look at their gains over the last couple of years. Okay, not quite sure what we're talking about here, but all right. How do I DM you? Laurie, here we go. Watch this right here, Laurie. Oops. Laurie. Oops. Damn it. I'm trying to send you a message here, Laurie. I can't seem to find one. Nope. There we go. Alright, I just sent you a quick little email there, Laurie. Hopefully that goes right to you. And that way you can reply to it. Forward, blah, blah, blah. Why? Look at the gains, blah, blah, blah. DM you, yep. Nate States 6. Nate, I have no idea what that means. Are you ready for the storm the next couple of days? Not really. Okay, I'm from the generation that's like, yeah, whatever, it is what it is. Let's see what happens. What platform we're using? The largest, we're using Thinkorswim. Okay, you can actually go to thinkorswim.com, download it onto your laptop or your desktop. Yeah, I would suggest using the downloadable version opposed to the online version. What are you trade forex or stock? I only trade stocks, no forex whatsoever. Volatility creates opportunity. You're absolutely right, it does. Do you buy options or stocks? I only buy stocks. I sell options. How do you benefit when people trade like you? I don't benefit at all. I'm just sharing information, looking to piss off the man, because we've been lied to long enough as people. Okay, the little guy, that's you and me. Okay, it's like, okay, borrow money, you put money in the bank, they make tons of money off of it, we get shit. Okay, they strike oil under your garden, what do you get? Dead tomatoes. Okay, so we've been screwed long enough. This is the kind of information that the powers that be don't want us sharing. I've learned more on TikTok in the past 3 months than I learned in all my time in high school. There's some stuff out there they just don't want us to know. And they really don't want us talking to each other. And if they can't control the narrative, then we're finding out shit that they're doing that we don't approve of. Yeah, that's why they don't want TikTok around. They only want social platforms that they can control so they know the information we're having. Okay, I don't benefit by you profiting. Okay? By you profiting, you're just making the stock market that much stronger. Okay? People buying, people selling. People buying, people selling. It keeps the economy rolling. Okay, Hakuni, you want to join in for a second? Have something to say? Oh, you have to send me another invite. Here it is right there. Here we go. Alright, Thinkorswim is great. There's several how-tos and demos. Plus, you can use a simulator. Yes, you can. I love the simulator. And I do tell every people, make sure you have a paper trading account. Uh-oh. What the heck was that? Oh, that's what it was. Okay. Now, I do encourage everyone to have a paper trading account. It's kind of like Monopoly. Consistently trade Monopoly money when you're trading. They have paper trading accounts, virtual accounts, whatever you call them. The prices. I've been trading for over 20 years. I still have a paper trading account, and I still continuously paper trade because I'm always coming up with interesting new trading strategies that I don't want to throw real money at. Okay, so I throw simulated money at it. All right, one more question. What stocks are you watching this upcoming week? How's Macy's looking for you right now? You buy stocks and sell the options simultaneously. Yep, you're right. Okay, Hakuna, you ready?
Yes, I'm ready. Okay, so I asked about the book value because I think you said in a previous slide that if it's valued more than X times the book value or something like that, then it doesn't fill your criteria. So what was that number?
Hey, Hakuna, that's going to be a personal preference. Everyone has a personal preference. You may look at NVIDIA and say, "Ooh, I like NVIDIA." I look at it and say, "No, I don't." So I look at it's personal opinion. Okay, what do you think? Do you think that if a company has a book value of $2, do you think it's justifiable for them to have stock price at 1,200? NVIDIA.
No.
And yeah, I know.
But I wonder, what is your personal preference?
Eight times personal preference.
8 times.
Yeah.
Okay, that is maximum.
Well, it could be different from you. You might like 5 times. You might like 20.
I mean, for you, it's maximum 8 times.
Yeah, for the most part.
Okay.
Yeah, but I do make exceptions once in a while. Like I'll make an exception for certain companies like 3M, IBM, Apple, Macy's.
Okay.
Certain companies that have 100 years of historical performance behind them, they have a more accurate pricing on their book value as opposed to the stock price. It's these new companies
how high valuation can you accept for your exceptions?
Well, that's going to be up to you. I mean, it's a.
No, I'm asking for your preferences.
It's.
I want to pick your brain.
Well, that's my for the major outline because I like coloring outside the lines. Let's call it 8 times. 8 times sounds good to me. So NVIDIA, I wouldn't pay more than $30-$40 for it, somewhere in that area.
Okay, and 3M, how many times?
Well, no. So there's a huge difference between 3M's been in business for over 100 years. They have a whole different set of rules. Okay, to be a dividend king, you have to increase your dividends for 50 years consecutively. 3M has done it for 67 years before this year they decreased. Well, I'm not going to let the CEO, who did something really stupid in my humble opinion, I would have went to the board of directors and say, "Hey, I really don't want to cut the dividends. Let's take a pay cut this quarter, pay out our dividends so we don't have to be bumped off the Dividend Kings list." But no, he didn't do that. He said, "Let's cut the dividends. Let's get kicked off the Dividend Kings list. Let's drop off of the, what do they call it? Jump onto the dogs of the Dow." Okay, why would you want to do that to a company? Okay, you're coming into a 100-year-old company. It's your responsibility to the shareholders to do what's right. Okay, take the money out of your own damn pockets. Keep the shareholders happy. You get happy shareholders, they're gonna stick with you. Okay, once you start cutting the dividends, they're gonna start bailing. So it's certain companies just get a pass. Like Bank of America has been in business for over 100 years. Wells Fargo over 100 years. You have these other companies that haven't been in business, like New York Community Bank. They're not on the same playing field as Bank of America or Wells Fargo. That makes sense?
Yes, I just asked ChatGPT regarding IBM and 3M since you mentioned them, and IBM is 7.39 times the company's book value, and 3M is 2.95.
Well, I like both of those companies, but do NVIDIA. What does it say about NVIDIA?
Them, I thought they were outliers.
Yeah.
They were not.
it all comes down to a personal preference. You know, certain companies
Right.
I let slide because they have longevity, the historical performance, and some of them just don't make it. Nvidia is one of them.
James, I just want to add that to my manual, to my sister.
All right.
I have to say.
Okay,
Thank you so
Hakuna,
much.
you have a great day. Okay,
Have
Lonnie,
a great
you got it.
evening. Good night.
You got it.
Bye.
Move on safe time. I have no idea what that means. Thoughts on trading options. All right. KGO, I love trading options. Amazon's going to be a no. Amazon has been operating at a loss for the last 10 years. Okay, they're not making any money. Okay, they don't pay dividends. So Amazon is a no. That's a no. Sorry. Okay, what else we got? ServiceNow. Mary, I've never heard of ServiceNow. Oh, wait a minute. Isn't that NOW? NOW. Yeah. Okay, Mary, you asked me about that earlier today. And earlier today, I told you it's $790. That's a no for me. It's way out of my price range. Sorry, it lagged when you answered my question. All right, for options. I love options. Okay, what do you have specifically? A question specifically about options. Because when you say, how do I feel about options? Well, I like options. Okay, fine. I need a specific question to give you a better answer. You want a better life? Ask better questions. It sounds silly, but that's what it is. You want a better life? Ask better questions. ODTE, yeah. Service, no. SERV, monthly, no. ODTE, ODTE. Yep, can't find that symbol. That's a no. Okay, Lonnie, yeah. Serve, no, it's a monthly. I don't do monthlies. The numbers just don't work. Best broker outside the U.S.? Honestly, couldn't tell you. How do you value options to sell? Simple. You ready, G? How do I value options? Well, let's find a company that I like, first of all. Okay. Here we go. If I'm buying it. Now, the difference between stock price and option price. Okay. Stocks are traded in New York. Options are traded in Chicago. New York, Chicago. A little bit different. So if I'm looking at a stock and the price up here is $16, the option for the $16 option is going to be 31 cents. That's more than 1%. That's a yes to me. If it's 1% or more of the stock price and the chart is telling me now's a great time to buy, then it's a yes. It's actually that simple. Okay, first thing I want to do is I want to take a look at my calendar. Okay, what's the calendar telling me? Well, the calendar's telling me I'm looking at PHM, BBY, and STX this week. Okay, I don't look at all the other ones because they're not important for this week. Okay, every week a different set, different set, different set, different set. There's 13 weeks in a quarter. 13 every quarter. January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. October, November, December, fourth quarter. Every quarter has 13 weeks. Week number 1 of the first quarter looks the exact same as week number 1 of the second quarter and third quarter, and so on. DCB, I'm loading up on $60 Canva if it gets back there. Kava. What the heck is Kava? Do you like that? Like that tone? What the heck is Kava? Kava Group. $81.24. I'm loading up on $60 Kavas. Why the hell are you doing that? That makes no sense to me. Okay, Kava's at 81 and you're loading up on the $60 ones? Why? Oh, ooh, I love a good sneeze. Can you repeat the Dividend Kings list? I'm not driving now, and I can write them down now. Okay. Best bet with that list. Okay. Best bet. Go to Google. Dividend Kings list 2024. Okay, it's going to bring you to a bunch of websites that are going to give you the Dividend Kings list for 2024. Okay, me repeating them is not going to help you out any. I believe there's 64 of them. Okay. Well, it's 11:30. It's past that time. How looks Intel next week? We're going to take a look at Intel a little bit later. What securities license do you have, if any? I'm just now discovering your page. Alright, KGO, you are new here because at the beginning of every show, I tell you, I have no licenses. The only license I have is a license to drive a car or a motorcycle. That's it. Hi there. Do you trade futures? No, I don't. You think we are before economic collapse? I don't even want to think of that, because if you start saying that, then it's going to happen. Because you say it, then he says it, then he says it, then he says it, then all of a sudden it's happening. Yeah. I don't like to look, I don't even like to think about that. Alright, so it's past 11:30, so let's call it a night. You guys have a great day. Look at it, not a single person showed up on Facebook today. Imagine that. Alright, so done for the day. Tra-la-la. Okay, bye over here on Instagram. Quick question, Kaden. What is the book value? Oh, well, that's simple enough. Book value. Let's say hypothetically you take everything the company owns. Everything. Pencils, papers, pens, markers, crayons, paper clips, chairs, tables, computers, everything. Buildings, machinery, everything. Liquidate it. That's the book value. Hopefully that answers that question. Okay, bye all y'all. Catch you tomorrow. Oh, look at that. 152 people on a Friday night. Don't you guys get people, don't you people have something better to do than listen to me? My ego's going to go through the roof. Anyway, hope I helped you out. Why investors don't like AMD? Because they don't have consistent dividends. Good show. Thanks. You're welcome, Melanie. Thanks for the info. Good night. Hey, Will, nice seeing you around. See ya, be angel. Alrighty. Alright, we're done. Tomorrow night, guys. Tomorrow night. Honey! You sound tired. Dividend investing for weekly cash flow. Period. Looking for that safe, predictable, consistent 1% per week, comma, I use pre-qualified dividend stocks to reach a safe, predictable, and consistent 1%. Period. You guys have a wonderful evening, and we'll catch you again tomorrow. I was streaming when I yelled for you.